All right, what's good, Ivy League Academy? Welcome back to the course. This is next section, next segment, whatever you want to call it. We're gonna hop into it because we don't waste time. All right, this one right here is making an analysis. All right, an analysis is pretty much not an educated guess. Let's say analysis is your bias for the day. It's whether you think the market's gonna go up or down. You know what I'm saying? Pretty much that's the basics. All right, we got three kind of analysis. We have our technical, fundamental, and sentimental. Okay, technical analysis. Technical analysis, the ability to read the charts like a book. This is a technique that helps traders make trading decisions based on recent and current data. Analysis based purely off the chart. So you got technical analysis. That's your fair value gaps. That's your liquidity draws. That's your supply and demand. All your factors on the charts is technical analysis that affects your the I guess the technical shit. I don't know. All right, fundamental analysis, aka news. Remember, we stay away from news, but we use our fundamental analysis on whether we should trade that day or trade the next trade after news or before, whatever the hell. All right, fundamental analysis is basing your predictions purely off economic factors such as news and events that happen in the ec- economical world. For example, COVID, stock market crash, war, whatever. All these things affect the market and the way the market moves. All right. We keep track of news using the economic calendar. I use my Forex books. If you type in my Forex books, um, economic calendar on Google, it'll pop up. It'll show you what times, how impactful it is. So you have low impact news, medium impact news, and high impact news. Uh, Medium and low don't really do shit, but the high impact news, that's what moves the markets, and we want to stay away from that. All right, so stay away from the high impact news. All right. Next one is sentimental analysis. Sentimental analysis is the process of making a prediction purely off emotions. If you are in an upset, down and out mood, you should probably stay away from the charts. Negative emotion will mirror and result to negative profits. All right, so if your pet fish died or some shit, just stay away. Don't even trade. You all sad, boohoo. Stay away from the markets, bro. But if you down feeling jolly or locked in or whatever, you might catch a good setup, whatever. All right, sentimental analysis. All right, so we got analysis plus a confluences equals a strategy. A strategy is a set of discipline rules that you follow to keep you profitable. All right, so I'm gonna do a quick rundown of my strategy, which is my analysis and my confluences. Okay, so we have technical. Let's say we have a demand zone with a fair value gap. All right, price goes into that fair value gap, taps that demand zone. That'd be my technical analysis. Let's say there's no news for the day. That'd be my fundamental analysis. So I know for a fact market is not going to be too crazy. All right, and then I have sentimental. If I'm in a good positive thinking mood, hopefully this will reflect on the markets and maybe we'll have some positive profits. All right, um, aka winning for the day. All right, that's my strategy. That's how I use my analysis and confluence, or that's how I'm gonna go over it with you guys. I'm about to get into this next segment. Welcome back, y'all. We on to the next section. This section is breaking down the charts, aka a trading plan. You should always have a trading plan. All right. Write it down in a journal. Write it down on your dry erase board, chalkboard, whatever. Write down your trading plan and follow your plan. Always follow your plan, cause you'll notice 100% of your losses is because you went outside of your trading plan trying to do some shit that you're not used to doing. All right. That's where your losses, most of your losses are gonna come from. All right. So for one, we're gonna activate our sessions indicator. If you don't know what an indicator is, you can go to TradingView, go where it says indicators, type in sessions. It'll show you the breaks between Asian session, London session, New York, um, and I think it has Sydney on there. But who the hell trades Sydney session? Nobody. So you activate that. Mark up your fair value gaps and draws of liquidity. All right. We determine current market direction by starting on higher time frames. So what you do is you start on your daily, then you go down to your 4. You work your way down. You go to the hour, 15 minute, 5 minute, and then implement your strategy based off that. All right. because I say this because higher time frames mainly indicate or give you an analysis, all right, a technical analysis of which way the market is going, all right. So what's next? Check news. I usually don't trade for the first 5 to 10 minutes after news is released. So let's say news is released at 8:30. I'm not trading until 8:35 or 8:40. All right. Implement a strategy and patiently wait for your setup to occur. If your setup does not occur, simply don't trade. All right. Don't force yourself. Don't force yourself to trade, bro. Because this market, look, remember this market owes you nothing. So never trade with high expectations. All right. Some people, well, I used to do it myself. I was a victim. I used to go down to TradingView, um, feeling like I'm about to win today. I'm about to get 100. I'm about to get 100K. I'm about to. You get what I'm saying? It's just it's unrealistic and it gives you high expectations, making you feel like the market owes you something. All right. Um, I'm gonna leave down. The next video will be a trade breakdown that I had recorded like 10 months ago. It's a very good video though. It's like it's pretty old, but it's a pretty good video of how I come up to the markets, how I implement my strategy, or how I my process through the whole situation. So y'all check that video out next, and that's pretty much. I think that'll be it for this video or this section. I'll holler at y'all.